Hello traders everywhere, Jeremy Lutz coming to you from the digital studios of Market Club. And as expected, the Fed cut rates by 25 basis points this afternoon to a range of 1.75 to 2%, marking the second rate cut this year, with the first being in July. And the market was clearly disappointed by a 25-point rate cut and was expecting or hoping for a 50-point rate cut. And as you can see, the S&P 500 currently down 0.7% and accelerating down as Fed Chairman Jerome Powell takes the stand to give his commentary on why they only cut by 25 basis points. However, our chart analysis score remains plus 75, indicating that overall we are still in a long-term uptrend for the S&P 500, currently trading at 2,983.63. And if you're wondering what these lines are on the chart, this blue line would be the 50-day moving average that we're still trading above, so looking good for the S&P 500. Key level to watch remains 2,853.05. A move below that level would issue a red weekly trade triangle, indicating a move back to a sidelines position for the S&P 500. Moving along, the dollar index had a spike as high as 98.50 right after the announcement, but slid back a little bit, trading at 98.30, down about 0.2% on the day, with the chart analysis score plus 70. So overall, still in a long-term uptrend, just coming under some recent pressure in the last week or so and testing that 50-day moving average. Key level to watch remains 97.47. A move below that level would issue a red weekly trade triangle, indicating a move to a sidelines position for the dollar index. Dow Jones currently down about 0.6% on the day, with a chart analysis score plus 85, indicating that overall we're still in a long-term uptrend, just coming under some recent weakness this week. Currently trading at 26,949.81, and our key level to watch remains 25,637.43. A move below that level would issue a red weekly trade triangle, indicating a move to a sidelines position for the Dow. NASDAQ faring the worst of the three indexes, currently down about 1%, trading at 8,106.23 with a chart analysis score plus 75. So we do have green trade triangles across the board and a long-term uptrend in place. Just, again, some recent weakness this week, much like the other indexes. Key level to watch would be 7,766.67. A move below that level would issue a red weekly trade triangle, indicating a move to a sidelines position for the NASDAQ. Crude oil has been the most volatile of the week, of course, with the attacks over in the Middle East taking out some production. However, after that volatile spike of plus 9% on the 15th, we have come back down to earth here, currently trading at 57.81, with a red daily trade triangle being issued today at 58.64, indicating that short-term time frame we are in a sidelines position for crude oil. Key level to go higher would be 62.28. A move back above that level would issue a green daily trade triangle, indicating a move back to a long position for crude oil. We'll take a look at gold, currently trading at 1,506.20 with a chart analysis score negative 70, indicating that we are in a sidelines position for gold across the board. So you can tell it's testing and sitting right above its 50-day moving average. Key level to watch would be 1,504.30. A move below that level would issue a red daily trade triangle, indicating a move back to a short-term short position for gold. I'm going to take a look at one more. It'd be Bitcoin. Relatively unchanged on the day right now, sitting below its 50-day moving average, as it's been there for about a week and a half. Currently trading at 10,176.19. Chart analysis score negative 70, indicating that overall we're in a sidelines position for Bitcoin. Key level to watch remains 10,949. A move above that level would issue a green weekly trade triangle, indicating a move back to a long position for Bitcoin. With that, every success. Have a great trading day, and I will be back on Friday to give you some key levels to look for next week.